My 401k, yep, better than being in stocks, but that's just for now. As I said, the biggest losses are going to be the people who are in cash, people who are in T-bills. Oh, the market's already closed. Look at how much time this is. I didn't realize we were after 4 o'clock. Dow ended up down 582 points. That's 3%. But they sold off the gold stocks into the close. So the GDXJ only up 6.7, or GDXJ up almost 10. But let's look how some of the individual larger mining stocks were. Newmont up 2.7, not much move there. Barrick Gold up 6.7, a bigger move there. Let me see, Yamana is a mid cap, that's up 9%. All these stocks are way off their highs. Goldfields, South Africa, up 15% on the day, so a bigger move. Kinross was up 9.5%. All these are good moves, but they all sold off on the close, which is pretty common. I mean, I watch the gold stocks quite a bit, and I still think there's a lot of selling on the close. And that's because a lot of the buying in the gold stocks is day traders, right? There's still no real money that has moved into this sector. You get some day traders that get long in the morning, they ride the rally up a little bit, and they want to close out their positions. They're trading on margin. They don't really have enough money. So this is all a bunch of noise right now. When the real money, when the institutional money starts moving into these stocks, when they finally figure out what I've known for years, and everybody decides that they need to have some gold stocks in their portfolio, these things are going to explode, right? If I'm right. I mean, they're not going to just go up 9 or 10%. I think we're going to see some days where you see 30, 40, 50% moves in big gold stocks because some big brokerage firm put out a buy recommendation on one of them. Oh, everybody needs to buy this. Nobody owns these stocks right now. See, once the institutions think it's safe to buy, once buying gold stocks becomes the conventional wisdom, then everybody's going to do it. See, right now, it's like, I don't want to go out on a limb and buy gold stocks because nobody else is doing it. And if I buy a gold stock and it goes down, then they're going to say, why'd you buy this idiotic gold stock? What are you, some kind of kook? What are you, like a Peter Schiff? You're fired. Get out of here, right? But if everybody else buys a gold stock and you buy it and it goes down, well, you're covered, right? Because you just did what everybody else does. If everybody else starts buying a gold stock and they all go up and then you don't buy one and then your shareholders meet with you, what are you, an idiot? Why didn't you have a gold stock? Everybody else bought a gold stock. What are you, got a moron? You're fired. So once everybody buys them, then everybody wants them. And of course, by that happens, the price goes through the roof. I don't want my clients waiting for everybody else to buy. I want to buy before the herd, not with the herd or after the herd. Let me see how many more questions I have because it's already past the time I wanted to stop. All right. I mean, when did I start at 1? Yeah. So all right, I'll go till 5. That'll be 4 hours. Can I get a little bit more water? As I said, these are like telethons, you know, like the Jerry Lewis telethon, except I'm not on my feet the whole time. But you see me, I squirm around on my seat because my butt gets sore just sitting in this chair for all this time. I got to like take some of the pressure off by getting up a little bit. But I'm sure I know I'm going to have a lot of calls to make because I'm getting a lot of messages and stuff. I got voicemails on my phone. So when I finish this, I'm not done working. I got stuff to do because, you know, I've spent 4 hours doing this podcast video and now I got extra work. My birthday is, I'm going to be working my ass off on my birthday here. Let me see. Hey, Peter, U.S. experiment with MMT. Yep. Modern monetary theory. Yep. Nothing modern about it. It's really not monetary and it's not a theory because a theory you have to like have the, you know, presume it is viable. Now it could look viable in the short run. Yeah. And that's what makes people think it could actually work. But it's all an illusion. It doesn't work. It just makes problem bigger, but they're hidden from view. But then when they blow up, you have to find something like the coronavirus to blame it on. Eric, what will trigger the loss of confidence in the dollar? It's going to be just a loss of value. At some point, prices will be rising fast enough that people will lose confidence. And it all is a confidence game. It's a con game. That's the only thing that really backs up the dollar, is confidence in its future purchasing power. And once the confidence is lost, there's really no way to restore it. It's a death spiral. And I think, unfortunately, I think the dollar is going to die. And the only way to resurrect it will be if it's backed by gold again. That'll be it. And the dollar initially is defined as a weight of gold. That's what a dollar was. It's a measure of gold. The dollar actually describes a measure of gold. How much gold you have. So the dollar is a weight of gold. That's what it is. We turned it into just a piece of paper, but that's not what it's supposed to be. But that's what it needs to be again. Love your podcast, Peter. This is love your podcast. Do you think wages will rise anywhere near fast enough to keep pace with hyperinflation? Not a chance. All prices will rise in hyperinflation, including the price of labor, wages. But a lot of people are going to lose their jobs in hyperinflation, so their wages will be zero. And their unemployment checks will not rise nearly as fast as inflation. But even people who have jobs, wages will lag the cost of goods. So everybody is going to be impoverished through inflation. The stocks will go up more than the price of gold, right? I think a lot of the foreign stocks that I have could go up more than gold. And I think they'll deliver good dividends that you can live on. So this is what we're doing. I'm building portfolios that I think will outpace inflation because there's no way your wages will or any of your government benefits. Paul, can you bring me water? I really need some more. All right, let's drop. Happy birthday, Peter. I heard you mention that you would be hiring asset management in Puerto Rico. Yeah, there's nothing on the website about it. You just got to send an email if you're in Puerto Rico or you're thinking about moving to Puerto Rico. It's really good if you're in the business, you have a license or something. But you can email Paul at schiffradio.com. But yeah, we don't have anything on the website because we're not. I don't know how many people we're going to hire. We'll see. But we're not even in Canada. But I can still use a couple of people. But I'm talking to a couple of people right now, so I'm not really sure. But obviously, over time, we'll be hiring people. So it can't hurt to send us your information. Could we be on the path to a guaranteed basic income? Yeah, we might have the guaranteed basic income. That was a campaign issue for Andrew Yang, and all of a sudden you got Republicans, Mitt Romney, who was the presidential candidate who lost to Obama. He's advocating some kind of basic income. I don't know if it's a permanent thing or just a coronavirus emergency. But look, the problem at some point is going to be the checks aren't going to buy anything. What good is it if you have a basic income if your basic income doesn't buy you anything? That's the problem. Now, there are other problems with it, but that's the biggest. If we're going to have hyperinflation, none of this is going to matter. Your income isn't going to matter. It's what you can buy with that income that's going to matter. Thoughts on the British economy? I had a lot of thoughts on the British economy. Don't have enough time to really address them. I think they're better off leaving the European Union. I would have been in favor of Brexit if I was over there. But what they need is less government, right? Part of the idea was they didn't want to deal with all the government in Brussels, which is good. There's too much government in Brussels, but there's too much government, from down at 10 Downing Street or from Parliament. It's not that the British needs less government from Brussels. They need less government there in London. They need a smaller government. And so they need more freedom. They don't need bailouts and stimulus and artificially low interest rate and inflation. The Bank of England's drunk from the same Kool-Aid. They're pursuing the same irrational monetary policies. The one good thing that's going to come out of this is at the end of this, when we have this currency crisis, all of these guys, their reputations are going to be destroyed. Their theories are going to be completely and utterly discredited. And so hopefully we'll be able to, have sound money and have a rethinking of all this. And so that maybe we'll embrace sound money again and have, the conventional wisdom actually be wise instead of completely idiotic, which is what it's degenerated to. What books or chapters have been the most insightful? Look, I don't know. I read, as a kid, I read Rothbard, and I said I read Hazlitt. I read Ayn Rand. I read Austrian free market thinkers, libertarian, older philosophers, and I had my dad. I read my dad's book, The Biggest Con. And, the book that I turned into a book with my brother, How an Economy Grows and Why It Crashes. His was How an Economy Grows and Why It Doesn't. Kingdom of Maltz, my dad. We still have copies. I don't know how many we have left, but you can go to my website, schiffbooks.com, and get I still have some copies of The Kingdom of Maltz that my dad wrote. I don't have any copies anymore of The Biggest Con. You can find a few on eBay or Amazon. I don't have any to sell. I have a few, but I'm not selling them. I want to keep them. But I still have a few of The Kingdom of Maltz left. And we have our own books. I think, or you can go on Amazon and order my books, Crash Proof. Crash Proof 2.0 is the more recent one. Get that one. The Real Crash, the revised edition. You can get that on Amazon, or I think I have a link to that through shiftbooks.com. And then if you're going to get How an Economy Grows and Why It Crashes, try to get the collector's edition if you can. If not, just the regular edition is a little cheaper. But I think they're all kind of discounted now on the online booksellers because they're older. They're several years old now, but they're very, very valid. They're in fact they're probably more relevant now than they were years ago. Agree the U.S. dollar will decline, but where will foreigners end up parking their cash? Yeah, well, they'll get out of dollars either into other currencies that they think are less bad, or in gold, in silver. A lot of the cash isn't going to be parked. It's going to be lost because when the dollar crashes, a lot of wealth is going to evaporate with it. So people will lose that. But what they're able to get out before the music, also my computer froze up. All right. If they get out before the music stops, yeah, and they'll put some into stocks, into equities, into other assets, into real estate, whatever. But I mean, a lot of money just disappears. If you were in your 30s and had $500,000 that you can get with a couple of weeks, what would you do with it? I would send it to me. I would open up an account at Europe Pacific Capital and invest that $500,000. I would talk to one of my representatives and get a plan. Like, let them know all of your particulars, all of your your goals and your objectives and things like that. And help. And I can manage that portfolio. If my strategy is suitable for you and my representative, we can determine that suitability, then yeah, I mean, get invested, and you can talk with him about which type of strategy. A separately managed account, a wrap account, certain funds, brokerage, app managed, whatever. But go to europac.com and call the 800 number, or just fill out a form to have a broker get a hold of you. And congratulations for being in your 30s and having any money. I mean, most Americans are broke. They don't have $500, let alone 500,000. So that's good. But what you need to do is preserve the purchasing power of that 500,000, because one day $500,000 may mean nothing, right? It may be just pocket change. So before that happens, preserve it by spending it now, not spending it on consumer goods that will depreciate, but acquire real assets that will hold their value, potentially appreciate, and pay dividends. If you were 22 in Canada, had about 200,000, what would you do? Again, is that California? No, I think that's California. Yeah. No, Canada. Well, yeah, I mean, send it to me if I could. I mean, I'll be in Canada soon. Just let my representative know that you're a Canadian. In the meantime, you can buy some physical gold up there or something. But yeah, send an email to us. Go to Europe Pacific assets, or EuropacificFunds.com. Anyway, I'm out of questions. Oh, well, that's a good thing. Anyway, since I got to all the questions, I think I'm just going to end the podcast. I'm out of questions, right? Because there's nothing left for me to read.
Yeah.
All right. So I'm going to end it. I'll cut it a little short, so I won't go the full 4 hours. But as I said, there's a lot of good stuff in here. Hopefully, people can actually sit through and listen to the entirety of it, because I answered questions, but all throughout, I interjected a lot of important stuff, which, I mean, maybe we can even grab some of that important stuff and piece it together and make a shorter video out of that, so that maybe people, that can't, sit through 3.5 hours. But I know people listen to the Joe Rogan's podcast. It's 3 hours, sometimes closer to 4 hours. So yeah, I mean, especially now, when a lot of people don't have anything else to do. And again, the airwaves are filled with a bunch of nonsense. The news, financial and regular news, everything is wrong. All the opinions are wrong. I mean, maybe, once in a while, a guy like Jeff Gundlach comes on and says some things that are right. But even he sugarcoats it a lot. He may be, dumbing it down for the audience. Maybe he's afraid to say some of the stuff that I'm saying, although I don't think he's quite as bearish as me. But I think he's probably closer to me than the mainstream. That's how ridiculous the mainstream is. But most of the people that come on, I mean, just complete nonsense. They're just talking to bail themselves out. I mean, they're trying to save their own butts from mistakes that they made, and they need these government bailouts. And they're trying to pretend that it's for the country, or maybe some of them actually think it's for the country. Again, a lot of these guys don't know, right? They're drunk on the same Kool-Aid as everybody else. They actually think that bailing them out actually bails out the country. They don't understand how capitalism works. I mean, which is very frustrating because you have some of the most successful people in capitalism, people who have made billions, right, in at least a somewhat capitalist economy, having absolutely no understanding at all of the system that helped make them rich. Now, the problem is a lot of the guys on Wall Street, the hedge fund guys, they didn't get rich because of capitalism. They got rich because the central banks polluted and destroyed capitalism. And as they did that, as they siphoned all the capital out of Main Street, they enriched a lot of these speculators on Wall Street. So it's no wonder that they don't understand the problem, right? Because they got rich off the problem. So they don't want the problem solved. They want the problem perpetuated. Bye for now. And again, thanks everybody for contributing and for wishing me a happy 57th birthday. Bye-bye. Who's left to buy? Nobody. Everybody's already bought. You just got a bunch of people who are looking to profit from the halving who want to sell. And in fact, as I expected, as I said on my last podcast, that they may not have bought the rumor, sell the fact. They might have sold on the rumor of the fact. And that's exactly what they did, because even though the halving didn't happen until today, Tuesday, the real break, I think, in Bitcoin was on over the weekend, was a Saturday or Sunday. And all of a sudden, Bitcoin in about, I don't know, 5 minutes fell almost 2,000. It went from about 10,000 down to almost 8,000 in just 5 minutes, 10 minutes, collapsed. It immediately bounced back to around 9,000. As I'm recording this now, it's 88 and change. But we got that big sell-off leading up to the halving. And of course, by the time the halving happened today, it was a yawn. It had no impact on the price. But we did get a big sell-off leading up to the halving, because I think the people who were speculating were worried if they waited for the halving itself, the price might have dropped. And so they front ran the halving, and they decided to sell in advance, which is something I thought might have happened. And I talked about it on the last podcast, and that's exactly what did happen. But now I think you still have a lot of guys who bought in front of the halving, who were intending on selling at a higher price after the halving, and may have to settle for whatever price they can get. I think a lot of disappointed Bitcoin speculators are going to be selling, and there's another leg down. That initial 2,000 point dollar drop was the beginning of a bigger move. We barely got above 10,000. I mean, we got to like 10,100. There's so much resistance up there. Even with all the hype of the halving, we couldn't even really sustain a move above 10,000 going into the halving. We got that big sell-off. Now, we did get yesterday the Paul Tudor Jones interview on CNBC, which I thought was another catalyst to make Bitcoin go up, and that maybe if he was not positive on Bitcoin, it would end up being a negative. And what happened was the Bitcoin rallied sharply. It started a few hours before Tudor Jones was going to be on CNBC. And I watched the rally. It was a sharp rally. And as soon as Paul Tudor Jones started to talk, that's when the rally peaked. The absolute price of Bitcoin, it was over 9,000. Forget where it was, 91, 9,200. But it peaked just in the middle or as he started to talk. And it sold off as he was talking. And by the time he finished, about half the gain had been gone. So it was clear that a lot of Bitcoin people were trying to trade Paul Tudor Jones. They knew he was going to come on. They expected him to talk positively about Bitcoin. And so they wanted to use it as a trading opportunity to buy the rumor of John Paul Tudor Jones and sell the fact as he spoke. And that's exactly what happened. And you can actually see that trade play out in real time, just perfectly. But I think it really was just, a symbol of what's happening on a broader scale with the halving. It's a much bigger buy the rumor, sell the fact. And so it's not playing out in as short a time span. It will take place over a longer period of time. But just to talk a little bit about what Paul Tudor Jones said, because he didn't give a glowing endorsement of Bitcoin by any means. He did admit that he thinks he has 1% of his portfolio in Bitcoin, and he thinks it could be a little more, that it's no more than 2%. It might only be 1%, but he's not really sure, right? He didn't know exactly. But clearly, if he's only putting 1 to 2% of his portfolio in it, he regards it as extremely speculative, right? I don't know what percent of Paul Tudor Jones' portfolio is gold, but I'd be willing to bet it's at least 10 times as high as his Bitcoin allocation. And I think the reason that he's keeping the allocation so low is because he realizes there's very good probability that Bitcoin's going down and he's going to end up losing money on that position. And so he wants to lose money on a small position because you can overcome that. Now, he did leave the window open, the possibility that Bitcoin could be his best performing asset, that in this environment of massive inflation and money printing, that Bitcoin really could take off. And since he's so confident there's going to be inflation and a rush into gold, and I agree with him on that, he just thinks that Bitcoin might be the fastest horse in the race. And so why not bet a little money on gold, on Bitcoin? Because if gold goes up because of inflation, maybe Bitcoin will go up a whole lot more. So let me throw 1% of my portfolio into Bitcoin just in case. And that's, I think, the position he took, which is not a big position because after all, most of the people who own Bitcoin today, the vast majority, probably have a lot more than 1% of their net worth in Bitcoin. I mean, I would say that most of these Bitcoin fanatics, their entire net worth, it could be in Bitcoin. I know that guy, Anthony Pompliano, I get into some wars with him on Twitter once in a while, otherwise known as Pomp. You know, he's talked about the fact that half of his net worth, and I think he's got a pretty decent net worth, but half of it is in Bitcoin, right? Well, you got all these Bitcoiners that are so excited about Paul Tudor Jones saying people should buy Bitcoin. Yes, with 1% of their portfolio. So if you've got 50% of your portfolio in Bitcoin, you're not following Paul advice, Paul Tudor Jones advice. Can you imagine if all the Bitcoin holders decided to follow Tudor Jones advice? Right? Imagine. Right? They'd have to sell 90% of their Bitcoin, right? There would be a crash in the Bitcoin market. If everybody who owns Bitcoin went to follow that advice, the market would crash. Now, I know people are going to say, well, but what if everybody else in the world just decides to follow Tudor Jones and put 1% of their net worth in? If that happens, then, well, I'm going to make a fortune keeping half of my net worth in there, which is true. But the odds of that actually happening are very slim. That's why that's a 1% allocation. Because if you lose 1% of your portfolio and you're a good trader and you're making money on other things, and I'm sure Jones is going to make a lot of money on his gold positions, whatever they may be, and maybe he's got some gold stocks. I think he'll make so much money there. Blowing 1% on a Bitcoin gamble is going to be no big deal. But if you've got half your net worth in Bitcoin and you lose that, you may not recover, especially if you're one of these Bitcoiners that thinks gold is obsolete now and you own no gold, you own no silver, you've gone all in on Bitcoin. There's no way that Jones is going to do something like that, right? He's absolutely. So to say that, hey, this is the reason you should buy Bitcoin because now a hedge fund manager who is speculating on inflation. First of all, Paul Tudor Jones is in the minority, right, of people who are looking for stagflation, right, that kind of agree with me, right? There's a handful of us out there in the economics, and there's some people, you got Ray Dalio who says a lot of the same things that I do. So there's other big fund managers that are seeing stagflation. But there's not that many that even are worried about it. And if most of the people who aren't even worried about inflation now and who see no reason to get out of the dollar, if they become worried about inflation for the first time and they really want to seek out, exposure, a hedge, something like gold, what's the odds, right, that are they going to go for gold or are they going to go for Bitcoin? If they don't own anything right now and they're managing institutional money, they're conservative by nature, they move slowly, and all of a sudden for the first time, they're worried and they want to hedge. Are they going to pick something like gold that has real intrinsic value, that's been a store of value for thousands of years, or cryptocurrency that's 10 years old and they have no idea what it's ever going to be worth because it has no current intrinsic value? Are they going to gamble on Bitcoin? or are they going to play it safe with gold, right? Obviously, gold is their next move. I mean, Jones already has a bunch of gold. He already has probably a bunch of gold stocks. All right, I'm going to take a flyer on Bitcoin. And who knows how long he's going to be in this Bitcoin position. Once this thing really starts to fall, he might cut his losses. He might get out when he's down 20, 30%. He may not ride the thing all the way down to zero. So who knows how long he's going to be there. But just because he may have a position now, this is not some big endorsement. This is one guy who's in the fringe kind of the hedge fund world acknowledging that he's doing something extremely speculative by taking a flyer on Bitcoin, but he has a feeling that it's going to work out because he thinks that we're going to have all this inflation and gold's going to go up. And so people are going to be looking for inflation hedges. I think he's wrong. And I heard people tell me, hey, Peter, look, it's just 1%. Why don't you put 1% of your net worth in Bitcoin? And, I'd rather put another 1% in junior mining stocks. I mean, if I'm going to take a big gamble, because that's what Paul Tudor Jones said. He thought that the upside in Bitcoin was greater than the upside in gold. So he thought there was more potential. Now, I don't think he appreciates the downside risk. I mean, he does. But I think if you weigh the upside potential relative to the risk, I don't think Bitcoin is a better risk-reward dynamic. Now, maybe if you think the upside potential is 1 million or something crazy like that, then you may come to that conclusion. I just don't think there's that much upside relative to all the downside. Yes, could Bitcoin end up going up more than gold for a period of time? It could, but I don't think it's worth the gamble that it might, when I think the odds are that it won't. But getting back to these, the mainstream guys, so are they going to take a chance? I mean, even Jones admitted on the CNBC interview that gold has a long history and a long track record, and it's proven. And Bitcoin is the new kid on the block. It's very risky. It's unproven. And so even the guy that owns both, right, has very different views of gold versus Bitcoin. One is a conservative store of value, and one is a flyer, right, that he's taking a shot on. As more people in the mainstream finally decide that they got a hedge and there's inflation, they're going to choose gold. They're not going to go from nothing to Bitcoin, right? They're going to go to gold before they potentially take a shot at Bitcoin, and then only with a small amount of money. But of course, if Bitcoin has already collapsed by then far fewer investors are going to be pressured to go in it. Because I think right now, when people see the big gains, hey, why did you miss out on that? Why didn't you get in? But once Bitcoin really starts to fall, then it's the people who got in that feel like idiots, and the people who avoided it can look like the heroes because they didn't fall for it. And that's when you get the real big PR problem for Bitcoin, right? When you have all these horror stories, not a bunch of get-rich stories where high school kids took their bar mitzvah money and became millionaires because they bought Bitcoin. Then you're going to hear stories about people who went broke buying Bitcoin because they invested a lot more than bar mitzvah money, right? They took their house money, they borrowed money and bought in at Bitcoin at a much, much higher price. They got in at the end of the bubble, or as the bubble was deflating, rather than early on, right, before much air even got into it. And so once Bitcoin has that really negative PR problem, it can't shake it, and then that's it. Then the party is over. But anyway, we're again 8,800 and change now. We'll see what happens tomorrow. Ben Bernanke is talking. So the markets are probably not Ben. Tomorrow, Jay Powell is talking. We had a few other Fed guys out today, but of course, none of them have the status as the chairman himself. So the markets are really going to be looking to what he has to say, potentially about negative rates. I am still looking for a big break in the dollar. I haven't had it yet. Still looking for a big move up in the price of gold. I think it's getting ready to happen. Hasn't happened yet. But I think it is going to happen any day. But anyway, I will be back again with another one or two podcasts later in the week as the markets develop. Again, we went off on a very, very weak note for the stock market. So I think we could be in for some interesting action in all the markets in the days and weeks ahead. Bye-bye. I was stealing or how many rules and regulations I was breaking. But because I was so critical of the rules and regulations, I had to make sure that I abided by them. But anyway, I just went off track. I want to get back to what I was talking politics. The other twist that might be coming is that Biden may in fact not be the nominee. And I've heard a lot of talk, and it makes sense. People want to compare the current situation of Joe Biden to the situation that Lyndon Baines Johnson was in for the 1964 election. So Johnson became president when JFK was assassinated. And he won election in 1960. I got my dates wrong. So he became president and he won the 64 election. It was the 68 election that I'm going to talk about. So he was elected in 1964. He became president because Kennedy was shot. He beat Barry Goldwater, who, in my opinion, was probably the best candidate the Republicans ever fielded. I mean, Ronald Reagan, in a way, might have been better than Barry Goldwater, but I don't know that. I think Barry Goldwater would have been a better president than Reagan, right? But Reagan was a great candidate, and you know, Reagan was a big Barry Goldwater fan, and so was my father. I mean, my father campaigned hard for Goldwater. You know, most people back in the day too. I mean, you know, were Rockefeller Republicans. The Republican Party was very far to the left, and so the fact that Goldwater even got the nomination was a major move for the Republican Party, and that laid the foundation for Ronald Reagan to win in 1980. But the Democrats loved that. I mean, they were so far left back in 1964, but you know, they were able to win. You know, based on the fact that the Republicans nominated Goldwater, but he would have been a great president, Barry Goldwater, and the country might look a lot different today had we elected Barry Goldwater instead of Lyndon Johnson, because you know, then that started the war on poverty, the Great Society. You know, a lot of stuff happened, Vietnam, a lot of bad stuff happened because of Lyndon Johnson. He's probably one of the worst presidents we've ever had. Maybe he's even the worst. I mean, it's a tough call. We've had a lot of bad ones, but he was pretty damn bad. But anyway, so he won in 1964. And so in 1968, he was unpopular. I mean, there was a war going on in Vietnam that was very unpopular. And there are other problems in the economy. And so he was low in the polls, but he was an incumbent, and he was going to run for his, you know, second reelection. And he had Hubert Humphrey was his vice president. You know, for whatever reason, I don't know, but after Kennedy died and LBJ became president, he didn't select a vice president, right? So he served out the rest of that term without a vice president. But then at the convention for the 68 campaign, he picked, you know, Hubert Humphrey, you know, who was actually I think he was a senator from Minnesota at the time. So he left the Senate, you know, to become a vice president under Johnson in 64. So 64. So anyway, so 1968, Johnson's going to run for re-election, but then he gets challenged. You know, Eugene McCarthy, kind of a relatively unknown guy in the Democratic Party, challenged Lyndon Johnson. Only guy willing to do it, because nobody wanted to go up against the standard bearer, the sitting president of the United States, right? Nobody wanted to, primary against that guy. But McCarthy did. And the New Hampshire primary came up, which is the first one, and McCarthy almost won. He got 42% of the vote. LBJ got 48%. And so that was a huge wake-up call. And the fact that this unknown guy did so well against such an unpopular sitting president, that caused Robert Kennedy, JFK's brother, the former secretary, what was he? He was the attorney general, former attorney general of the United States. He threw his hat in the ring and declared his candidacy for the presidency. Right? Shortly thereafter, LBJ ended up dropping out. He gave a famous speech. He went on television, said that he would not seek, nor would he accept the nomination of his party to serve another term. So he basically bowed out because of the primary challenge. Now, of course, Robert Kennedy would have won. He won the California primary, and then a couple days later, he got killed. And so that allowed Hubert Humphrey, who was the vice president, to get the nomination and lose to Richard Nixon. And I think people are looking at what happened and thinking the same thing might happen again with Biden, because he is a very weak president. There is an unpopular war. Maybe it's not a war where U.S. troops are involved, but there is a war in the Ukraine and Russia. So that's there. But the economy is lousy. We've got stagflation. And, the president, is basically, inept. I mean, everybody can see the problems that he has. Now, he is refusing to debate. He has one challenger right now, which ironically is Robert Kennedy's kid, right? JFK Jr., the nephew of Robert F. Kennedy, is running against Joe Biden. Now, so far, Joe Biden is kind of ignoring this guy, like he's no big deal, right? And he doesn't want to debate him. He's saying, I'm not going to have any debates. I'm the sitting president. Why should I have any debates? Maybe it's not a great example for success, but Jimmy Carter in 1980, when he was the sitting president, he was challenged in the primary by another Kennedy, Teddy Kennedy, right? Ted Kennedy challenged Jimmy Carter, just like Robert Kennedy, right, challenged LBJ. And, he wasn't shot. The primary, concluded. And Jimmy Carter won. But he did debate him. There were several debates between Carter and Kennedy. Carter didn't duck the debates, at least give the guy credit for that. He didn't hide out like Joe Biden is doing. He faced the challenge, And Ted Kennedy was a senator. He was a popular guy in the Democratic Party, had a great name, right? Kennedy. The closest thing to royalty we have in America are the Kennedys. And so Jimmy Carter at least primaried. But Joe Biden doesn't want anything to do with Robert Kennedy Jr. And I don't blame him because, I've listened to some of the things Robert Kennedy Jr. says. And I think he would beat the crap out of Biden in a primary debate. So it's not going to happen. Now, to me, Robert Kennedy Jr., there's things that he says that I agree with, right? But there's a lot of stuff that he says that I don't agree with. I mean, he is a big government guy. He's a big social welfare guy. He's not a big defender of free market capitalism, but he does criticize a lot of the stuff that the government is doing wrong that I also believe. I mean, he's kind of like a libertarian in a sense when it comes to certain issues, surveillance or, war on drugs. There are certain things that he wants to get rid of government for. Talking about government corruption, government and business, how they're cracking down on First Amendment. He was, against all the mandatory vaccines. And, so, I mean, he says a lot of things that would appeal a lot of people. But the Democrats are acting like this guy is a Republican, that this guy is like another Donald Trump. I mean, he really is closer to what the Democrats were 10, 20 years ago than the Democrats are today. I mean, a lot of the issues that he's championing were Democratic issues. They're just not there anymore. I mean, the Democrats were supposedly, right? We don't want war, right? But now they're the warfare party. I mean, he talks about the neocons in the Democratic Party, but he's making a lot of noise for Biden. And so I think that as this primary season goes on, and Robert Kennedy continues to, beat up on Biden. And, he did a Twitter Spaces with Elon Musk. So that helped introduce him to a lot of people. And a lot of people are going to be looking for alternatives to Biden. But right now, other mainstream candidates are kind of reluctant to get into the mix. But I think that at some point, if Kennedy starts polling high enough, or even if we get to a primary and he has a good showing or wins, that's going to open up the door for like a Gavin Newsom to come swooping in and saying, hey, I'm in it. Because if it looks like Robert Kennedy Jr. is going to win, I mean, it's going to be like a Bernie Sanders, right? The Democratic Party didn't want Bernie Sanders to get the nomination. He probably would have gotten a nomination
The Peter Schiff Show.
Today's episode is sponsored by Omaha Steaks, with high-quality beef that's naturally aged for the ultimate tenderness, juiciness, and flavor. To get $30 off your qualifying order, go to omahasteaks.com and use the promo code GOLD at checkout. Minimum orders may be required. See site for details. Well, I am back in Connecticut in my basement once again. Welcome to the 900th episode of the Peter Schiff Show podcast. 100 more episodes to go to get to 1,000. And, I want to report that I was able to return to the United States from the UK without any episodes at the border. And I think I mentioned this on a podcast a while ago. But for a couple of years, I had a very difficult time coming back to the United States. It all started shortly after the 60 Minutes defamatory broadcast that accused me of using my bank to help criminals launder money and evade taxes. After that, I noticed that I had a hard time coming back to the States. Whenever I came back and I was going through customs, they would see my passport and immediately would pull me aside. I'd have to go to a special room where I'd have to wait, and then I'd get interrogated by somebody, ask me a bunch of questions, look through all of my luggage, and then I would eventually be able to, come back in. And also, I don't know, about a year ago, or maybe not quite a year, I forget, but I lost my global entry. I had been a member of global entry for a long time. If you don't know what that is, it's something that you get, you apply with the government, you got to go down and they run a background check on you, and then they give you a global entry. You also end up getting TSA pre-check for free when you're a member of global entry, and you get this known passenger number with that. But it just means too that I could get back into the US quicker because you go to a shorter customs line. It's more automated. Well, anyway, shortly after I renewed my global entry, for like another 4 or 5 years, I paid the fee and I renewed it. And in less than a year after I renewed it, I lost it. I got told that I no longer had global entry. In fact, the only reason I found this out is because my pre-check was no longer working. And so I lost that because I lost my global entry. But I never got an explanation. I tried to get it. I even used Freedom of Information Act, but I could never get anybody at the government to tell me why I lost my global entry. But I think it all had to do with the investigation of me, because of the bank for money laundering and tax evasion. I must have been put on this list of suspicious people. And so my passport was flagged, and anytime I came back into the country, they just assumed that maybe I was out there laundering money. And so they wanted to, really check me out. Well, the first time that I didn't have a problem coming back to the United States was a few months ago. I came back to Puerto Rico from St. Bart, and, I was expecting to get interrogated, and they let me through. And I wasn't sure, maybe it was just, a one-off event. And so I was kind of nervous coming back into this country. Not that they would find anything. I mean, I don't smuggle anything. I mean, so it's just a hassle that I have to take longer to get out of the airport. After a long flight coming back from the UK, you don't like to spend a couple hours, waiting for the customs officers to clear you. But I sailed right through. Just a couple of standard questions, no big deal. Got right back in. And so I think it's over. I think what happened was, while this investigation was ongoing, I was on this list. But the fact that I'm no longer on the list, maybe that tells me that the investigation is over. And I've assumed it was over because they ended the investigation on the bank a long time ago. But it pissed me off in that press conference that the Puerto Rican regulators called to announce the fact that they were putting my bank into receivership. instead of allowing it to be sold to Kenta, which is the company that had bought it or was buying it, waiting for government approval. By the way, it's almost been a year now. It'll be a year on June 30th that my bank had been in receivership, and not a single customer has gotten any money back. I mean, all the money is there. I mean, there's not as much there now as there was a year ago because they've been spending it, right? But there's still enough there to make everybody whole, as far as I know. But nobody has gotten a nickel yet because of this government process. But during that press conference, the IRS guy was there, the top IRS guy in the criminal division. And he disclosed the basically failed investigation of my bank because no charges were filed, because no evidence of any wrongdoing was discovered. But he made it sound as if we were doing something wrong. We just, got away with it, right? But somebody asked him, well, what about Peter Schiff? Is Peter Schiff under investigation? And the guy said, well, we're not allowed to comment on who may or may not be under investigation, after he just finished talking about how my bank was under investigation for 2 years. So if you're not allowed to comment on investigations, then why the hell did he comment on the investigation about my bank? Especially since he knows the investigation exonerated my bank, yet he didn't want to mention that fact. So he just wanted to pretend that the bank did something wrong. It's just that, nobody got charged with anything because I guess they couldn't quite find enough evidence to pin it on anybody, but they just assumed that this bad stuff was going on. But with respect to the question about me, he just said, well, I can't comment on whether or not Peter Schiff is under investigation. Now, why not? I mean, he just commented on the bank. Now, I don't think he should have commented on the bank. I think that was wrong. But once, he had the precedent of doing that, he could have said, well, no, we're not investigating Peter Schiff, or we did, but we closed it. No. He didn't comment on it because I think he wanted to leave the false impression out there that there was some open investigation about me. And so that's why I haven't been charged yet, because they haven't finished the investigation. They wanted to leave that specter out there that, yes, Peter Schiff may be guilty of these crimes. We just haven't finished the investigation yet. And so it's an open matter. And, they never want to come out and say there's no more investigation. But the fact that I can now return to the country, to me, is some indication that maybe they did officially close this investigation, to the extent that, I'm no longer on the suspect list of money launderers or tax evaders. And so I can, come back into the United States without a hassle. So, I mean, that was comforting because I've been traveling under this stigma. And I finally ended up getting my TSA pre-check back, but I had to get that directly. And I got approved for that. So I lost the pre-check. I mean, the global entry. And maybe I would get it back. I don't even know if I applied again, maybe they'd give it to me. But they never told me why they took it away in the first place. Anyway, let me get on with the podcast. First thing I want to discuss is the jobs numbers, the weekly unemployment numbers that came out yesterday on Thursday, because this was a disappointment to the markets in that there was a big spike in weekly jobless claims. The prior week, they were at 223,000 claims, and it jumped up to 261. That's a big jump in a single month. I mean, way above expectations, but a very large jump. And in fact, the number of people filing first-time unemployment claims is now the highest since October of 2021. So in the prior week, the markets were celebrating or heralding this great jobs report when all these jobs were being created. And now we get a very bad weekly unemployment number, a week later. And again, I have been very suspicious, and I've been voicing my suspicion on this podcast of the jobs numbers. We've had, 12 out of the last 13 jobs reports have beat estimates. And these labor numbers, or these job numbers, this is what everybody is hanging their hat on, to claim that we have a good economy because we have this supposedly strong labor market. Well, the employment numbers have been the only good numbers, and they're only good superficially, but they're the only ones that are. All the other numbers are bad on the surface, and they're even worse when you dig deeper. So the unemployment numbers are the outlier. But they are inconsistent because remember, even though we keep getting these official job reports that are stronger than expected, the household survey, which is released at the same time as the official numbers and doesn't really get much media attention unless the official number is bad and the household numbers are good. See, when that happens, the media finally talks about the household numbers. But when the household numbers are bad and the official numbers are good, well, the household numbers don't even exist, right? Nobody wants to talk about it, especially when, you got Joe Biden in the White House and the media wants to pretend we've got this great economy. So they want to ignore economic data that would cast doubt on that narrative. And they want to just focus in on the data that seems to support, this robust Biden economy. But the fact that you've got this big contradiction between the household numbers and the establishment numbers, that in and of itself casts doubt on the jobs numbers. But then when you see these unemployment numbers, that's also an inconsistency that casts doubt on these numbers. The layoffs that are announced every week cast doubt on these numbers. So there's a big cloud, I think, surrounding all these unemployment numbers. And so I think that you can take them with a grain of salt. And to me, if you're going to look at the unemployment numbers and say we have a good economy because we still have, this strong labor market, then you have to believe that all the other economic data, environmentalism, as a backdoor way to get in socialism, to get in more government because they hold it as the solution. And of course, they blame climate trades on capitalism. So it's greedy corporations that are causing the climate change. They're destroying the planet just to make a buck. And so it's the government that's going to save the planet. And we're going to do it with socialism, but don't mind that. Just, we're going to save the planet. And it works. But I think COVID-19 is even better, right? I mean, climate change is going to take a back seat to COVID-19, right? Because I think this is a threat that people can see more clearly. I think there's still a lot of people that didn't necessarily buy into the whole climate change or whether or not it was man-made or how it would impact us or if we could even do anything about it, right? Even if we changed our lifestyle and the rest of the world didn't, it wasn't even going to matter. But I think this COVID-19, this is a threat that a lot more people can appreciate, wrap their arms around, and really understand because they've heard stories, people have died, right? And now we've had all of this, scare tactics, fear-mongering about this particular disease that a lot of people are very, very nervous about catching it. And you've also created a situation where a lot of people now are financially benefiting from the disease because they're not having to work or they're not having to pay rent, but they're getting checks from the government that are bigger than the ones they used to earn when they worked honestly and got the check from their employer. So you're creating a big government threat, right? Or a big threat for the government to protect us from COVID-19, right? This pandemic, we're all going to get sick and die, right? Forget about climate change. That's going to kill us eventually. COVID-19 is going to kill us right now. And so we really need socialism. We need complete government control. You have to surrender all of your rights to the government in order to be safe from this disease. And people are buying into it, especially if you're also bribing them at the same time. Hey, give government all this power, surrender all your liberties. And by the way, you're going to get $2,000 a month. Oh, and your wife's going to get $2,000 a month, and your kid, you guys are going to make a lot more money. Just make this deal with the government. Just give up your freedom and your liberty, and you're going to make all this extra money, right? And people are dumb enough to buy it. So I think the left is going to milk this crisis as long as they can. They want to delay any kind of so-called reopening as long as possible. They want to elongate the crisis so they can have a bigger opportunity to grab more power and deny more individual liberty and to get more and more of the socialist agenda through Congress. Now, some of the Republicans may, be against this. They may stop this from passing while Trump is president. But obviously, if the Democrats can keep the crisis going, keep the fear alive long enough to elect Biden and a Democratic Senate, then all of this stuff is going to pass in 2021, right? All this stuff that the Republicans are blocking because they have the Senate, right? Assuming they continue to block it, which I'm not sure they will, but whatever they do block will be unblocked when they lose the Senate, right? And if, we still have the fear, right? Because this COVID-19 is really allowing the socialist agenda to gain even more traction. It gives the left a very, very easy lane, right, to divert people into about this. And so they're going to keep playing this up. And it's a very, very scary time, not just because of the economics of it, but the politics. And the politics are ultimately going to drive the economics, because the politics are going to make it worse. They're going to put more pressure on the Fed to print even more money. In fact, today there were, 2 or 3 different guys from the Fed that came out and talked today. And they were trying to kind of downplay the expectation of negative Fed funds, which the markets now have priced in for early 2021, negative Fed funds rate, first time ever. And you have some Fed guys that were saying, look, we really don't like negative rates, really don't want to go there. So they didn't basically draw a line in the sand and said it's never going to happen. But they did, indicate that they didn't think it was a good idea, right? But they didn't take it off the table. But then Donald Trump came out and he tweeted, and he said that we should not turn down this gift of negative rates. Like, if we're lucky enough to be blessed with the gift of negative interest rates, we should not look that gift horse in the mouth. We should just take the gift and be grateful to have it, right? As if, this is free money. And, from Donald Trump's perspective, right, as a debtor, right, he borrows a lot of money. He uses a lot of leverage in his personal life to build his real estate empire. But so he always thinks about things from that perspective, from that vantage point. And so from the point of view of somebody who's always borrowing money, low interest rates, negative interest rates are a gift. Why are they a gift? Because the lender is being paid to borrow. You're actually being given money to borrow money, right? You're not having to pay to borrow. You're being paid to borrow. So that payment is really a gift. You're getting that money for free. All you have to do is borrow. In fact, you don't have to do anything with the money. You can borrow it and just hold the cash and just give it back, right? You don't have to take any risk. You just get paid, right? So it is a gift. And Donald Trump is like, hey, why should we turn down a gift? Let's just be humble and accept the gift, right, from the money gods. Except it's not a gift for everybody. It's a gift for some people. But who is on the losing end? Who is giving that gift? Involuntarily, I might add. And those are the lenders, right? If people are getting the gift of negative interest rates, who is giving them that gift? The people who are paying the negative interest rates. That would be the saver. So the saver is being punished. So is everybody in America a debtor? No, there are some net savers here. There are people who are having money taken away from them so that others can get a gift. So it's not a gift. And especially if the only way to keep interest rates negative is for the Federal Reserve to print a lot more money to buy up the bonds into negative territory, because no, right-minded person would use their own money to buy negative yielding bonds and give a gift to the U.S. government. So if the Fed is one that's going to give that gift, well, beware of central bankers bearing gifts, because where is the gift coming from? They're printing the money. They're creating inflation. They're stealing your purchasing power. So for Donald Trump to say, hey, these negative interest rates are a gift. Yeah. Well, what about higher prices, right? That's going to be the other side of that. We have to create inflation to give debtors a gift. And we do that at the expense of savers, but now we've destroyed the value of everybody's paycheck. So all the people who work for salary and wages, now their paychecks have been diminished in value so that people who are in debt can get a gift. So Trump needs to understand that negative interest rates are a wealth transfer, but more importantly, by distorting the free market and leading to less than optimal decisions and allocations of resources, negative interest rates are bad for the economy. So the overall economy is weakening. Even if there are some people benefiting at the expense of others who are losing, everybody is a net loser, because the people who suffer more collectively than the people who gain, because we are diminishing the economy. We're making it less efficient and less productive. And so we are lowering everybody's living standard collectively. Yes, some people's living standards may go up while others, go down, But the overall standard, if you just took the average, is going to be going down, and negative interest rates are helping to drive that. But Donald Trump is basically trying to browbeat the Fed and back them into a corner where we're stuck with negative rates because Trump wants negative rates because, again, he thinks they're great. He thinks maybe negative rates are the key to his reelection, right? If we can just get rates low enough that we can put a lot more juice into the economy and he can be reelected. In fact, I was listening on the Sunday shows. Stephen Mnuchin was out there, Treasury Secretary, and he was talking about refinancing the national debt, right? That he's going to refinance the debt because it's a great time to refinance debt because interest rates are at historic lows, and this is a great opportunity, and this is going to be great for the American taxpayer. We're going to save the taxpayer all this money because we're going to refinance this debt. Well, first of all, if you wanted to save the taxpayers money, don't go into debt. Stop running up these big debts if you're concerned about saving the taxpayer money, right? No one in Washington gives a damn about the taxpayer. But putting that in to sell, all that counts is your dividends, how much you're earning in dividends. But I know that gold stocks are going to be much higher in the future than they are right now. So I want the price to go down right now so I could buy more, right? If you had, you had a time machine and you had the price of a stock 10 years from now and you knew how high it was going to be, you would want it to go down before then because you just want to buy more if you know where it's going to be. Well, I don't have a time machine. I don't have the newspaper from 10 years into the future, but I don't think I need a time machine. This is so obvious that I can see it in advance. And so I'm so convinced that these stocks are going to be much higher in the future. I want them to go down now, even though I already own a bunch, because I'm still earning money. I have to invest it somewhere. I'm not going to spend it all. And so I want to buy more of these stocks. So I think we might get more of a pullback there, but not as significant as what I'm looking for in the overall stock market. Next, I want to talk, though, about the debt ceiling. That was the topic mainly of my last podcast. I talked a lot about the debt ceiling, brinkmanship, and all the political theater involved in the debt ceiling. Well, today, some of the actors came out and took a bow. The Republicans actually passed a bill to raise the debt ceiling. They're going to raise it by $1.5 trillion, which is nothing. I mean, maybe that'll buy them 6 months, right? I mean, because the deficits are over $2 trillion a year. So raising it by $1.5 trillion, they were doing that, years and years ago when we only had $400 or $500 billion deficits a year. When you're running deficits of over $2 trillion a year, a $1.5 trillion increase in the debt limit doesn't really get you much. Now, personally, I would just assume the debt limit not go up. I want the ceiling left so that we could really start dealing with the debt and paying our bills instead of, putting more of our unpaid bills on a credit card. Well, the Republicans have passed a debt ceiling increase, but the Democrats in the Senate are not going to pass it. And even if the democratically controlled U.S. Senate passed it, Biden ain't going to sign it, right? So it's dead on arrival. And the reason that the Democrats don't want to sign it is because they say it's heartless. They're slashing government spending. This is terrible, right? The Republicans are punishing America with this increase. We want to just increase the debt ceiling, just a clean bill to increase the debt ceiling, as if that doesn't punish Americans. Who does Biden and the Democrats, who do they think is responsible for repaying all this debt? It's not like Americans avoid being punished if we don't make them pay now, if we let them pay later, because they're going to pay more later. Increasing the debt punishes the American people who are on the hook for repaying that debt. So if we really want to do the American people a solid, we should not raise the debt ceiling. We should reduce the burden of debt that we are placing on them. But Biden and his buddies in the Democratic Party want to pretend that the average American, the middle class, is getting away with something. If we just keep increasing the debt ceiling, then the average American never has to cover the cost. Like these bills are just going to be paid, by Santa Claus or the man in the moon.
No, the American public, the middle class, are responsible for all this debt. And so the responsible thing to do is to stop adding to that burden and deal with it. But the Republicans don't even do that because, first of all, there are no real cuts. The only cuts that are happening are in discretionary spending, right? So that means that all the non-discretionary stuff, Social Security, Medicare, national defense, none of the cuts apply to national defense, interest on the debt, none of that's getting cut at all. That's 70+% of the budget. So if you're not going to cut 70% of the budget, even if you cut the other 30%, you're not going to make much headway. But the other 30% doesn't really get cut. What the Republicans are saying they want to do is limit the increase in that spending to 1% a year. Remember, I talked about how the government's version of a cut is you increase spending by less than you had planned on increasing it, and they call that a cut, right? Well, in reality, that's still an increase. It's just a smaller increase. Now, in a way, if you only increase discretionary spending by 1% a year, and if inflation is 6%, 7% a year, well, then in real terms, spending is being cut. And that would be the case. And the people who were getting these government benefits would feel the pain of the reduction in the real purchasing power of whatever money they were receiving from the government, because it wouldn't keep pace with the increase in the cost of living. So in a way, yes, it's a little bit of a cut, but it's not nearly enough to get us to where we have to be. As I mentioned in my last podcast, given the fact that we have over a $2 trillion annual budget deficit, in order to balance the books so that we stop burdening Americans with even bigger debt, which they have to repay with interest. So obviously, if you have to repay your debt with interest, it's more expensive than just paying for the spending right now. So either we have to cut spending by a third, right? 33% cut in everything, which includes Social Security and Medicare and national defense. And if you're not going to cut those, then you got to pretty much abolish everything else. You have to eliminate completely the discretionary spending. If you're going to take Social Security, Medicare, national defense, and put them off the table, well, you just got to get rid of everything else. And I don't even think that even balances the budget. Alternatively, if you don't want to do that, you can raise taxes. It would take, I think, about a 40% increase in taxes to balance the budget. That's how much Americans are undertaxed relative to what the government is spending. Think about that. A 40% increase in every tax that you pay. So the Social Security tax would have to go up 40%, payroll taxes. Medicare tax up 40%. Your income taxes would have to go up 40%. That is an enormous increase. And of course, they might actually have to go up more than 40%. Because if you raised income taxes and payroll taxes by 40%, you would not get 40% more revenue. That would actually harm the economy. It would cause the revenue that you're taxing to go down. Incomes would go down if taxes went up that much. So in order to get an extra 40% in tax revenue, well, you might have to raise taxes by 50 or 60%. But again, that would destroy the revenue even more. I don't think it's even possible. How much they would have to raise taxes to balance the budget is so big that it can't ever work because of the economic impact and the adverse consequences those higher taxes would actually have on the very thing that you're trying to tax. So most of it is going to have to come from spending cuts, but real spending cuts. But the Democrats won't even sign on to these tiny spending cuts that the Republicans are proposing. Biden and the Democrats are saying these are draconian, these are heartless, this is going to destroy America. We're not going to vote for this. Instead, we'd rather destroy America with debt rather than destroy them with spending cuts. Anyway, it was for Trump to beat Hillary Clinton in 2016. Anyway, what I want to wrap up this podcast, though, talking about is Tucker Carlson out at Fox News. You know, two of the guys whose shows I was on the most, Don Bongino and now Tucker Carlson, are both gone from Fox. I used to do both their shows. Now, maybe that means Laura Ingraham is next. Hopefully she sticks around because she's the only person left on Fox News who has me on. Now, I go on Fox Business. I go on Liz Claman's show. I go on Charles Payne's show. So that's another network. But Fox News, which has a bigger platform, there were 3 shows that I go on, and now 2 of the hosts are gone. But by far, I think Tucker Carlson was not only the best host on Fox, he was the best host on any news network, cable or broadcast. He was by far the best. In fact, I talked a lot about his recent podcast about the dollar's reserve currency status. But more than that, I mean, he called out all the hypocrisy regarding the war in the Ukraine and COVID. I mean, so many things. And when they were doing the George Floyd stuff, and I mean, so many things, he had the guts to come out and speak the truth. You know, when nobody else wanted to speak the truth, everybody else in the mainstream media wanted to be politically correct. They were kowtowing to all of that pressure. And Tucker had pressure because a lot of advertisers who would have advertised on his show, the #1 show on cable news, not just the #1 show on Fox, the #1 show in all of cable, right? But some advertisers were afraid to advertise because they're worried that some left-wing nut is going to boycott them because Tucker Carlson is telling the truth. You know, when you're telling lies and there's someone out there telling the truth, you got to silence that person, right? You want to be able to tell your lies and have other people not call you out, right? And he had a big soapbox to call out all these lies. And he had a lot of people, a lot of fans, myself included, who enjoyed watching his show because he was very unique. Now, of course, I'm like Tucker in that respect, but I'm just here on, Peter Schiff Show. I don't have a Fox News platform. I'm not the host of a show like that. His audience is more than 10 times as big as my audience. And, it's easy for me to speak the truth. I mean, I got to, give it, applause for Tucker because to speak the truth in that corporate environment, knowing what the consequences are, right? Hey, I'm my own, right? I mean, I can speak my mind. And yeah, maybe they ended up shutting down my bank. The media destroyed my bank because they didn't like what I said. But I can't get fired, right? I mean, because I don't have a boss, right? I'm just direct to my audience. I'm not dealing with a big corporate structure. But he was in that world. And even though he was with Fox, yes, Fox is Republican, but they're not libertarian Republican. They're, mainstream, George Bush, military industrial complex. They're not Tucker Carlson. Tucker Carlson pushed the envelope at Fox, right? And that's the reason that he was so hated. I mean, you look at all the people that are celebrating and popping the champagne because Tucker Carlson was fired. Look at all of his enemies, because his enemies, the people who were Tucker's enemies, those are the people that you want to be your enemies. When all those people are celebrating that you've been fired, Tucker was doing a good job. He was an important voice that needs to be heard. And it's a shame for Fox that they caved into the political pressure because you don't know why they fired him. Yeah, they got this big lawsuit from Dominion that they settled, the defamation lawsuit, but that wasn't Tucker's fault. Tucker didn't do that. So I don't know what else was a catalyst, but I think the problem was they were worried about Tucker and the things that he says because of how honest he is at calling out the hypocrisy and the lies of the establishment, of which, Fox is part of the establishment. Now, they're not nearly as bad as CNN or MSNBC or ABC, CBS, NBC, all those, but they weren't Tucker. Now, they allowed Tucker. To their credit, Fox allowed Tucker to speak his mind for as many years as he did. But at some point, they must have decided that it was too much for them. But I think that this is going to end up being a loss for Fox News. It's not going to end up being a loss for Tucker Carlson because there is a big market out there for what Tucker Carlson is saying. You know, there are a lot of people. I mean, I tap into part of that market myself, so I know that it's out there, and I know that he can reach it. He doesn't need Fox News. He's got a big enough audience already, and Fox News certainly helped him cultivate that audience. I mean, I can imagine the size of the audience I would have if I had a multi-year run on Fox News. I mean, I think I could have a very successful program. Plus, he's got a whole bunch of writers and producers. I do it all myself. I mean, so I just make it up. I don't have people writing scripts for me and stuff like that. But I'm sure if I was up there on that big a soapbox, I'd have a big audience too. Maybe not as big as Tucker's. I don't know. But he's got a great audience that he wouldn't have had. But he can take that audience, especially with the internet and social media. He doesn't need to sign a deal. I mean, there are other broadcasts. He could do One American News. He could do Newsmax. He could do something with the Daily Wire. But I think that he should just go out on his own. I'd love to do something with Tucker, but Tucker don't need me. He doesn't need anybody. He can do it all himself. And I look forward to being a guest on the Tucker Carlson show whenever he starts producing it. In the meantime, I think Fox is going to lose a lot of viewers. There are people that are pissed off, and rightly so. I mean, my mother, I didn't put her up to it. My mother, who's a big fan of Tucker Carlson, she tells me, I'm never watching Fox again. My wife doesn't want to watch Fox either. It's like we can't turn on Fox News. My mom canceled her subscription to whatever. I forget what I don't subscribe to it, but my mom subscribes to some paid Fox Now, or I forget what it's called. But she says, I'm canceling it. And if my mother is doing that, I mean, I'm sure that lots of people's mothers and fathers and sisters and brothers are having a similar reaction. They're just really upset. They feel like Fox sold them out by firing Tucker, and they want to show their support for Tucker Carlson by, boycotting Fox. And, a lot of people that tuned in to Tucker Carlson's show, 8 to 9 o'clock, well, they watched 9 to 10, right? They stuck around. So Tucker's show and his popularity benefited the shows that came later. Well, now they're not going to get the benefit of Tucker's audience not turning the dial, because Tucker's audience isn't going to be there. And there are a lot of other alternatives to Fox News now, and other ways that people can get Tucker. So all the people that are out there that are so happy that Tucker Carlson is off Fox News, be careful what you wish for, because he may even be more effective and speak even more freely. I mean, imagine the stuff that Tucker Carlson said when he was still under that Fox News umbrella. Imagine what Tucker Unleashed is going to say. I look forward to that, and I wish Tucker Carlson Godspeed in his new adventure, in this next stage of his career, which I think will be the best yet. Anyway, thanks everybody for listening, and don't forget, the inflation that we're experiencing now is going to kick into a much higher gear during the next economic downturn. That's what nobody understands. Everybody just assumes that when the economy weakens, so too will inflation. No, the weakening economy is going to strengthen inflation, because inflation is the expansion of the money supply.
Stocks have struggled in recent days due to some better than expected economic data and more hawkish talk from Fed officials. This has revived fears that the Federal Reserve could make a mistake and raise rates too high and keep them there too long, sparking a recession. In this video, Peter Schiff points out that the markets are worried about the wrong mistake. Peter said the market reaction to Jerome Powell's recent speech got him thinking about the possibility of a Santa Claus rally. The markets ignored Powell's hawkish talk about interest rates going higher and staying there longer and focused totally on the prospect of a smaller rate hike in December. But in the last few days, several Fed members have repeated Powell's messaging about having to go higher for longer. The market perception is that this stronger than expected economic data will prevent the Fed from recognizing that the inflation threat has subsided. That will lead to the Fed making the mistake and raising rates too much and leaving them too high for too long, causing an unnecessary recession. Peter said, of course, we'll occasionally get data that is stronger than expected. But most of the data has been weaker than expected. And a lot of the strong data, for instance, the non-farm payroll report, is only superficially strong. When you dig beneath the surface, you find a different story. He also pointed out that annualizing the 0.4% month-on-month CPI increase we had in September and October comes to 5%. While that's lower than the 8% rate we saw earlier this year, it is still a far cry from the Fed's 2% target. Nothing the Fed had done thus far is going to succeed in bringing inflation down to 2%. The markets now expect the next rate hike will be 50 basis points instead of 75, followed by a 25-point hike. After that, the markets think the Fed will be finished tightening. We will now get into the video and listen to Peter Schiff as he explains why our current train of thought is flawed and the actual risk we should be looking forward to. In the meantime, ensure to like the video, subscribe, and drop your comments below.
What got me thinking that we could have this Santa Claus rally was the way the market reacted to Powell's speech last week, where despite the Fed chairman delivering a hawkish speech, the market just shrugged it off anyway. Well, what got the sell-off started on Monday, and then some follow-through again today, were some more statements from some Fed guys about the prospects of the Fed having to go higher for longer when it comes to interest rates. And in fact, that point got hammered home yesterday with the release of some economic data that was actually stronger than the markets had been anticipating. First of all, we got the Chicago PMI for November. And this one wasn't necessarily a beat because I'm not even sure what they were looking for. But the index came out at 46.4 and the service index came out at 46.2. Now, that one was actually a slight miss because they were expecting 46.3. But again, anything below 50 represents contraction. So regardless of what investors were expecting, that was definitely a weak economic number. But the surprise came when we got the ISM Services Index for November, which was supposed to come in at 53.5, which would have been a decline from the 54.4 from the prior month. And instead, it came out at 56.5. So instead of going down, it went up. And not only did it go up, it was above the upper end of the consensus range, which went from 51.5 to 56. So this was definitely a stronger data point than the markets had been expecting. We also got a beat on October factory orders, which were supposed to rise by 0.7, and that would have been an increase of the 0.3 in the prior month. But instead, we had an increase of 1. And so that too was a beat. And that was a 1-2 punch because as soon as these numbers came out, the S&P futures sold off sharply and they never recovered. Gold dumped. I think on the day gold was down about $30. All of the losses came as a result of that release. And the idea that this strong economic data is going to prevent the Fed from recognizing that the inflation threat has subsided and it's going to result in the Fed making a mistake and raising rates too much or leaving them too high too long and causing this unnecessary recession. And stocks are getting hurt for a couple of reasons based on that. One, of course, the higher interest rates are automatically a negative for stock market prices because of the impact on valuations, because the higher the rate is, the lower the discounted present value of future earnings, which is what stocks represent. But also, if the Fed causes this unnecessary recession, that will depress earnings, and so stocks have a lower value when they have lower earnings. And of course, corporations have a lot of debt, and so higher interest rates directly subtract from earnings by running up the interest expense. So all of this is scaring the stock market. But of course, the reality is we're already in recession, and we don't have a strong economy. Yes, every once in a while, we're going to get some data that comes out stronger than expected, but most of the data is weaker than expected. And even the data that is stronger than expected, like the most recent non-farm payrolls report, and I went over this on the podcast, but all of the strength is superficial. Look beneath the surface, and the reality is weakness. It reminds me of Sam Bankman-Fried. I mean, we've got a Sam Bankman-Fried economy. We've got a Sam Bankman-Fried job market. Because if anyone had bothered to look beneath the surface of what was an obvious fraud, his whole empire would have been revealed as a scam. Everybody just accepted the fact that this guy was worth close to $30 billion and that he had all the money to do everything he was doing. Nobody bothered to question how it was possible that this guy could possibly have so much money based on the business that he claimed to have. Nobody really looked beneath the surface, and nobody questioned some of the ridiculous statements that he was making and the self-serving nature of a lot of the companies that he was rescuing. He was basically rescuing himself. He was probably trying to prevent bankruptcies of other crypto companies that were involved with FTX from revealing the underlying problems at FTX. But the same thing is true with respect to the U.S. economy or the labor markets. Don't accept the numbers at face value. Dig a little deeper and look at what's actually happening. Because if you do that with the jobs numbers, as I've been doing on this podcast, the jobs market isn't strong. The jobs market is weak.
Even if the Fed continues to hike rates, it'll never catch up to an inflation curve it is miles behind. Because, as I've been saying, the only real way to fight inflation is a two-pronged attack, which would include positive real interest rates, and we need cooperation from the U.S. government. We need to see cuts in government spending, something that's not going to happen. Government spending is going to continue to increase, and so will the deficits that are making that spending possible. Peter pointed out that we still have stimulative monetary and fiscal policies with negative real interest rates and increasing budget deficits.
And the risk that everybody is worrying about is once again the wrong risk. It's not that the Fed is going to raise rates too much. It's that they're not going to raise them enough. It's that they're going to pivot too quickly. It's not that the Fed is going to mistakenly believe that the economy is strong and then to overestimate how high inflation will be. It's the weak economy that's going to cause inflation to be higher, because as the economy weakens, production will decline, but money printing will expand. In fact, at some point, the Fed will pivot in response to a much weaker economy than it expected, and that's when the dollar is really going to tank. And that's when consumer prices are really going to take off. The inflation that we're experiencing now is going to kick into a much higher gear during the next economic downturn. That's what nobody understands. Everybody just assumes that when the economy weakens, so too will inflation. No, the weakening economy is going to strengthen inflation, because inflation is the expansion of the money supply. And the weaker the economy gets, the more the Fed is going to expand the money supply to try to stimulate it. And as the return of quantitative easing causes a mass exodus out of the U.S. dollar from foreign central banks and private holders, then the falling dollar is going to push consumer prices up dramatically, also increasing the size of our trade deficits and our current account deficits, creating a self-perpetuating spiral of inflation and economic weakness.
According to Peter, the Fed is going to claim, falsely, that it will claim that it is making progress on inflation. And the markets will accept that. They're not going to question that excuse. It will at least pass the smell test of plausibility, because most people won't dig deep enough to see what's going on. They want to hear what they want to hear. And so, they will buy this. Because the Fed now has a plausible excuse, the markets are buying stocks, and they're buying bonds, and they're dumping dollars, and they're buying gold. But the reality of this report means that the Fed is in the process of pivoting even though it's not even close to winning its fight against inflation. And it's ultimately going to do a hard pivot even as the inflation rate accelerates and makes new highs because the recession that we are already in is going to get much worse. What do you think of Peter's assessment? Do you feel cheated by the Fed too? Let us hear your opinions in the comment section. Also, remember to like the video, subscribe, and turn on notifications. Thanks for watching.